Hello guys, welcome back to another Lumley trading video. In this one we're going to be doing some in-depth stock analysis on ATER. Now, this analysis, and like we do on the majority of small caps, all we really focus on is technicals. And why is that? Because what you're going to see, especially on the retail side, which again, a lot of these small cap stocks are going to be a bit more influential from retail. And the reason for that is, again, they tend to have a smaller market cap, so retail traders can just usually make a bigger impact on these stocks. But I mean, it's evident, even if you go in my comment sections a lot of the time, or you really just go anywhere, you go on Reddit, wherever it is, the majority of people holding these kind of small cap stocks, they're valuing old news, or news you already know about. And I mean, one big thing in the market is, if you know about it, it's already priced in. So that's one thing I just see really a lot in these small caps, and why it really opened my eyes to not pay attention to the fundamentals unless I'm trading or it comes out on that day and I'm trading direction. But you know, if it's come out 2 weeks ago, a month ago, I don't care what it was anymore. It doesn't really have an impact on these kind of stocks. Again, it might make a move once there's a denial or confirmation of that news, but really, once the news comes out, yes, for that day, fundamentals are always going to be the key driver. But as soon as that news dries up and you've got a lot of the retail space kind of holding on to that news, it's not going to have any impact on the stock. And a lot of the times I think people hold on to that news. And again, have a look around. Who are the people holding on to that news? Are they people that, for example, we'll say on this stock, bought at $2, it's now down at $1, they're kind of bag holding, they want everyone to buy, so they just say how great it is. Because again, that's what I see quite a lot of. It said, even in my own comment section, I see a lot, well, you get a lot of hate, especially on these small caps. You get a lot of hate a lot of the time saying, oh, that's rubbish, this news has come out. I checked the news, it's come out 2 months ago. It's priced in. It's not going to have any impact until, again, you get a confirmation or a denial. But again, then it's more of a day trade. You see where it's moving. A lot of these small caps you don't want to be holding as swings unless you've got some sort of protection. Because again, they're just so volatile. Unless you're willing to lose everything you put into it, really, they're not usually the best ones to be trading. But anyway, I thought I'd mention that first because I already know on something like this, I imagine some of you watching this now are going to be bag holding. Some of you are going to hate because you're bag holding. And again, what is then the outlook on this stock? So as of right now, not something I would be touching. The reason for that is between the value of $1.30 and $1. And again, you can use this as a zone. That is considered fair value. That's our statistical mean on the 6 month and our statistical mean on the 1 year chart. So at least how I look at stocks, how I view stocks on a technical basis, between the ranges of $1 and $1.30, that is all considered fair value to me. And I don't trade a stock at fair value for the main reason being, if something's fair value, it's, well, you know, where it should be. So I trade if it moves out either direction, because then again, I'm trying to play that reversal back to a fair value. But at this price, again, to me, there is no trading opportunity. So that's one of the things I'd be looking out for. And what you can probably be noting is if you break to the downside, really, if you get a close probably below 95 cents, that's not a good sign, again, if you're already holding, because not only is that a 52-week low, but you're breaking out of that fair value zone, and more likely we would push further down. And where would we have a target to the downside? So the only statistical level we have is at 12 cents. So overall, in time, we could definitely see that being a target, but again, will be quite difficult to push down to that kind of far. Again, that is 90% from where we are now. Definitely possible, because again, look where you were a year ago. I mean, we had a high of $7.25. We're down at $1. You know, it's already lost 80% of its value. Why can't it lose another 80? Again, it can always get worse. The situation can always get worse. So always be prepared for it to get worse. So that's kind of the thing I'd be watching for. If it gets kind of a close below $1, that's when I would be quite cautious. Again, we haven't had a close below $1 as of yet. But if we do, that would signal a very weak move in the stock. And yeah, 12 cents would be an overall target, but getting quite far from where we are now. So really, I'd be paying attention to the 3 psychological levels as well. And that's going to be 75 cents, 50 cents, and 25 cents. So those are the levels I'd be paying attention to if we continue to fall in price. Now, on the other hand, if we break 130 and we start pushing to the upside, what am I paying attention to? So 218 and 250. Now, these are probable levels. And by that, I mean, they're still likely to hit. And what I quite like about these levels, and again, you tend to see this quite a lot with standard deviation, it's why I love it so much, is whether you're looking at it as a standard deviation trader, which you can see at 219, cool, that's our first deviation, that's a resistance to us. If you're doing it as a straight support and resistance trader, again, this is a key pivot point. Multiple times we touched this level, come back, that was our confirmation before this strong sell-off. So no matter kind of who's looking at this, again, institutions tend to be a bit more standard deviation focused. They don't really do technical analysis. So that's why I really like standard deviation, because again, it's where a lot of algorithms trigger. So you can see what kind of smart money and big money's looking at, institutional money's looking at. And then you can see, again, retail traders tend to be a bit more support and resistance focused. So you can see what they're looking at. If the two line up, it's going to be a strong level. So that's why 218, I'd really be paying attention to. Again, if you get a break above 130, good chance that we can push back to 218. Again, I wouldn't really play the direction, but there is a good chance. But where really my trading opportunity would come is if we make it to 218. If we hit 218, that's definitely a level I'm looking to short. If there's shares available, that's to me quite an easy short. We can see if there's any options available, and options are available. So if there's liquidity in the options, again, as of right now, it doesn't seem like there's all that much volume in the options. But if we see volume really pick up, then it could be a viable way to trade through the options. But really 218, that's where I'd flip quite short bias. If we push to that level, at a minimum play the pullback, but otherwise, again, look to kind of play the reversal back to fair value. That's how you usually play them again. So what do I mean by that? Again, we get short at say 218, you have a target at say 210, $2. This is where you lock in maybe 20 to 50% of your position, depending on how conservative you are, or how reliant, or how kind of your belief in that it will continue down. But yeah, 20 to 50% of the position lock in that. Then that's playing the pullback trade. Move our stop to break even. If the pullback continues and we get basically a move back to fair value, that's a home run trade. You're going to make a lot of money. On the other hand, if we end up coming back to retest this and pushing high, which again, you always got to be prepared for either side. If it does that, then again, we stop out on either the remainder 80 to 50% of our position at break even. So if it goes that way, cool, we still make a small win, but we had the opportunity to make a lot more money. And that's kind of all trading is the opportunity there? Is your risk management there? Again, you risk manage your trades a bit differently. That's how I tend to do it. But that's just how I like to do it. It's how I feel comfortable doing it. Obviously, people are going to be different, but it's just one way I like to look at it. I prefer to kind of get those bigger moves because they're going to be great risk to rewards. Play the pullback, again, can get at least a 1-to-1 risk to reward on that. Stop at break even. If so, it comes out as near enough a flat trade. That's fair enough. But you get the opportunity to make really big trades. Now, if we break through here, then 250 is going to be that next level. Breaking through there, we would have further levels at 355, 370. Then going through there would be 450, 488, and our final two levels at $5.68 and $6. So a lot of levels here. Do you need to pay attention to all of them? No, like we kind of said before, you're waiting for a trade opportunity. At least on how I view stocks, there is no trade opportunity as of now. There's not a trade opportunity until really we hit 75 cents, which again, we'll knock these down now as key psychological levels. Again, look to play the bounce, and I would play these just like a deviation level. The first time we hit it, look to play a bounce. Probably a target of about 85, 90 cents. Have probably a 5-cent stop. Look to lock in some profits on that pullback, and then move my stop to break even and look to hold the rest to fair value. So that's how I would always be looking at these, and that's really where the trading opportunity to me comes. If we go to the downside, 75 cents. If we push to the upside, 218 is going to be that first trading opportunity for me. So as of right now, ATER, where it is now, has no opportunity, but again, you might already be holding or something like that. And if so, these are the things I'd be paying attention to. If you kind of break below 95 cents, I would be cautious. Not even break below, but really if we even close there at 99 cents, anything under $1, if we close there, I would be cautious. That is probably not a good sign, and we are probably going to continue lower. So yeah, again, these are just things to be prepared. It doesn't really matter what your situation is. You can use these levels in different ways. These are just how I view stocks on a technical standpoint. Obviously, fundamentals will matter. If you see big news come out, play the direction. Well, fundamentals is always going to be the key driver. They're going to blow through technical levels. But as of right now, where there is no news, technicals are really all that are going to be the key trading opportunities. If we're breaking to one of these levels, that's what I'd be paying attention to. Anyway, I hope you enjoyed the breakdown. This one was a bit long, so if you stayed the whole way, let me know in the comments. If you enjoyed the video, don't forget to drop a like and subscribe. Hope to see you next one, and that's it. Peace.